Alrighty, good morning everybody. It is Tuesday, April 5th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Let's really quickly go through what happened yesterday. Remember that we said if we were able to get through the previous daily high, which was 45.55.50, our eye level, then we were looking for targets up to 45.66 and then up into 45.74, and somewhere between 74 and 77 was really the zone. I didn't highlight the whole area, but that was what we were looking for. And then we said if we can pull back, get through that orange power level and start to get down below there, I'd look to sell into some of the targets we had down below. What ended up happening was it was just kind of a nice push all morning. And remember, just as we were coming into the open here, just as we found some support down around 40, just in front of our first expected support zone. So we started selling off out of the open, came right in front of our first 3250 expected support level there, and started pushing. And from there, we noticed the NQ started taking off. The AD lines were getting really strong. And so I told everybody we were going to want to be buyers, expecting the breakout to go ahead and push up into 45.66, and that would be our first target. Of course, first target would be the previous daily high. I called that potential breakout to the upside right here. So when we were just about 10-20 minutes into the open, as it started pushing here, I told everybody right when we were kind of bouncing up and down off of 45.46 that that was my expectation was for the push. So I went ahead and put an order in right on 45.46 and took it off at 55.50. So got a good trade there. And then hopefully some of you were able to get long in this push. Of course, it came right back to 45.46. And then as we were pushing and having trouble, I kept telling everyone there's a potential that even though there's all this strength to the upside, we very well could have this fake out, get the bulls involved and then go ahead and sell off. So as we were pulling back right here, I was kind of I was expecting that maybe we would actually correct all the way back maybe into 45.31 and keep going lower. So I was expecting a short, and let's see, we came down and the main thing we wanted to see was a breakthrough VWAP. That was going to be our first clue. Second clue was going to be getting below the OPL again. So they came down, they held VWAP. So that gave me a little bit of a wrench in my gears for the bearish argument. And then we came back up and came here. And when we came up just a few ticks above the previous high of the morning, and again saw some weakness going on, saw a lot of trouble as the bulls tried to push. They could only get a few ticks, and then they started to peter out. I drew in this scenario where I said we're kind of playing around, we pull back, we try to break out one more time, but only push a few ticks, and I expected a failure. So that's why you see this arrow pointing down at that moment, and you can see I jumped in, I got short aggressively. It didn't go very much. Second short actually gave me about 7 points, but then came right into here and held, and I believe from there it was just a rally the rest of the morning. Now it's interesting to note that we came right up to our first expected resistance zone here and had trouble for a little while. For a few minutes we were basically holding the bottom end of the shaded region, probed a little bit through it, but you can see a lot of trouble right at our first expected shaded area as resistance. And from there we got a pullback, but then the bulls just continued to rip things higher, and we got all the way up. Oh look, right to 45.74 quarter. Got two rejections from that area, a little peak above, and then that was it. Remember that our target up above was 81.50, and that was the 61.8 retracement that we were watching, and they came up literally 6 ticks in front of it, and that was the high of the day. Basically our power level at 78.75, or our eye level at 78.75. So that's how that yesterday went. It wasn't really the greatest trading morning. I didn't make a lot of distinct trade calls. I just kind of let people know that we wanted to be long right out of the open there. And then it's the expectation of the potential for that peak above and then fail to much lower. So that's where it brings us here. we came up, we came right into 78.75, our eye level up here. And you can see in the overnight session, the bulls went ahead and did a nice peak above and fail. So they got right above our 81.50, I believe it was like 61.8 retracement level, and got just a little bit deeper. Now there's one other level that we almost got to, and that is right here at 90.25. And that was our next major swing, I believe, that lined up with a retracement level from an earlier leg that we were looking at. So we got almost up to that level, and now we are pulling back, and we're right about the top end of yesterday's price action. So let's take a look and see from the perspective of the retracement of from the previous daily low all the way up to the high we made. We're sitting right at the 38% retracement here. So just keep that in mind. So let's go ahead and jump up. We're going to go, we don't need to look at the ultra high time frames this morning because we've already covered that yesterday. And again, there's not much new to stay from up there. So let's go down and get into the daily and take a look at what we're seeing here on the daily chart. So first thing I'm noticing is when we came down and pulled back from the high we made of like 3 or 4 or 5 days ago, um, we have a really nice doji there to the downside, right? So that's one of those candlestick or candle wicks that we talked about in our study session last week, I believe. Um, Pretty good little hint for a reversal or a rotation back to come up and retest these highs. So I'm just noticing that from 2 days ago. And then yesterday obviously was a really nice strong push. So we're going to have to see this morning if we can get the continued strength to come up and retest the highs we made back last week. And let's see, what else can we say? We don't really have anything as far as divergence from that low from 2 days ago that I was just talking about, but we still have a pretty clear bearish divergence from the high of last week. So these are just some things we want to be aware of. Um, Again, there's not necessarily the strongest bullish signal from that low from 2 days ago, but that could be it for the continuation higher. What else is here from a zoomed out perspective? We still have not come up into this major zone up here, which is again just about somewhere around 90 to 4,700. That's going to be an important zone once the bulls get up there. So let me just expand this out all the way to at least April 7th. I might as well just put it in as April 10th. That way it's out there for a few days. And any further, obviously, the major area that I'm looking at is that swing low up at that final little structure zone, which is up in that area there. And that is that 47.40, 47.40, 50, whatever, which we've been talking about for quite a while. So those two zones you should already recognize and maybe even have on your charts. On the flip side of things, if the bears, for whatever reason, get heavy and start to sell things off, we basically came down and tested this first major swing that I marked on the chart 2 days ago. So from there, we're looking at a major swing at 44.80, another major swing down at 44.58, and then a little bit further brings us to this major structure right here at 44.11.50. So that's about 200 points down. I don't think we need to talk about much past there. So getting down to that major swing here at 44.11, that area to me looks really, really ripe for a potential support bounce. So let's get down into the intraday time frames and see what we're doing here. Again, we came up right to the top of the structure zone, came down and held it and bounced, and then broke through, came down to the next structure zone, bounced off that, pulled back. We came right into that swing that I just mentioned a few seconds ago, and now we're back up. And just to look, yesterday's high up here again in that 74 to 77 area is exactly where the two structure zones end. So we've got a box up top, we've got a box below, and a little gap between them. That's exactly where we made our highs yesterday and then got a pullback going into the overnight session. And then you can see again that peak above in last night's overnight session right through it, and then bam, came right back in. And we've got, again, from a candle wick perspective, if you guys saw the study session from last week, that should look like uh, a candle that we like to focus on, right? So looks like a potential reversal. We also have a bearish divergence off the overnight high on every time frame except for the daily. So the 4 hour, the hourly, the 30, the 10, the 3, everything has a bearish signal from up there. Does that mean we're going to get a major pullback from there? It's a good clue that that could happen. So just keep that in mind. Doesn't have to happen, but if we do start to sell this morning, that is a good thing to have on our backs, right? To if we're short and the market is heavy and it's going, we know that we have a nice multiple time frame bearish signal bolstering our position. So just keep in mind if that happens. And I think that's it for that. Let's get down into the 60-minute and look at some distinct levels in here that we're going to want to pay attention to coming into the open. So first things first, we've got a whole cluster right around 74 to 77 here. Let's just say 75 to 80. That little 75 to 80 area is the high from yesterday. It's our orange power level. We've got that major retracement level at 81, 81.50, and our minor eye level at 78. So it's kind of a clusterfuck right there. What does that tell me? That whole little area could be pretty messy, so I'm not going to be trying to trade every single little level in there. However, if we can't get through that general zone, that's a bearish clue. You see that white dotted line in there? It's hard to see. Not only do we have 3 or 4 major things there, we also have the close from yesterday sitting there on where that white dotted line is. So all that stuff right there is telling me if we can't get through that this morning, we're going to want to be sellers back down into 50% of the previous day and even further. If there's a nice strong push through that little zone right there and we hold above it, I'm going to be targeting again all the way up into, we have the 90-50 level, which I'm not so sure this is going to be as relevant this morning anymore. I'm going to leave it there. So that would be a good first target in case there is a problem there. But then I'm really looking at this 45, say 98 to 4600 area. That's a really nice clean target I'm expecting to the upside. Again, it can just continue to push and keep going, but that's my first target to the upside once we can get through 90 and the overnight high. On the flip side of things here, let's look at the zones that I have marked for the morning. I wish I could. No, that's probably the best way. So if we pull back, we've got the 38% retracement lining up with the 50% of the previous day, and we also have our eye level 45, 55, 50, which should sound familiar, sitting right here. So this little zone is my first expected support zone if the market does sell through the overnight low. So that would be my first zone. Remember, the swing high over here is 55.50, which is exactly our eye level. So 2 days ago, that was basically the high of the day, right to our eye level, and then we failed. So that little zone right there, and if I zoom in, you can see I shaded it from 50% of the previous day at 53.75 up to 55.50. So there's a little 2-point zone right there. A little bit further, if the market gets through there, we're now looking at a potential major swing back from yesterday that to me looks like we've came up to that level. We failed pretty violently. We came back up to it. We failed again. In fact, we failed just a few ticks in front of it and came all the way back down, and eventually we broke through. We have not been back to actually test it from the other side. So again, once that breaks, I'd be looking at potentially that 51 level, and if they continue to go, we've got this nice pocket here from 44 to 46, and if 44 to 46 does not hold, we're right back to this little zone here, right around the 61.8 retrace of the whole push at 45.34 into 45.31. So we got that, and then the previous daily low. I know that it's close, and I know there's a lot of stuff, but if it breaks through 31, we've got the previous daily low into our other eye level, just a 2 ticks below it at 27, or 3 ticks below it. So these are the major little pockets I would expect to see the market hold, if it's going to hold. And outside of that, once the previous daily low breaks, our target is right into 13, and then right back to the lows from 2 days ago, where we have that major swing at 98 and our eye level at 96.75. So that little pocket there, which I need to update to, wrong one. Let me just update this really quickly here. We'll expand this to the 6th. Okay. So that would be that little pocket there. And then from there, all these other levels down below we've talked about in previous sessions. We just haven't gotten down to test any of them. So I'm not going to talk about any of those until we get down there. For now, we've got our targets to the downside and potential buy zones. Again, 53 to 55, that major swing at 51.50 or 51. Then our pocket here from 44 to 46. Next pocket 31 to 34, and then the previous daily low, give or take a few ticks right there. Then it's down to 13 and then down to 44.98. Anything above us getting through that 90.50 is going to open us up to 4600, and then a little bit further 46.31, which was that major rejection zone from a few days ago. And then we're right back up into everything else. 46.42, 46.58, that should sound very familiar. That was, I believe, we never made it up there. So 58, and then a little bit further, it's 84, which is right in front of that major 4700 area. So that's what I got for you guys this morning. Remember that we do have a multiple time frame bearish signal from the overnight high. So if we are to continue to follow through to the downside, that's a really good thing to have on our backs. Outside of that, if we end up pushing and getting through that level, our overnight high at 45.87 quarter, then it's a really clear break of a multiple time frame signal, which should open us up for continuation to the upside. Remember, anything's possible. We're just going to have to react to what the market does and focus in on the levels that make the most sense to hold and trade to and from those areas. So that's what we have for this morning. We've got about 5 minutes into the open, and I'm going to jump over to our members section and get to our short time frames and see what we can do here coming into the open. So have a great day. I will see you all tomorrow.